And then you got crypto, the fastest adoption of technology in all recorded history, which is the internet of money, where all of these things are going to be tokenized and will be part of this. It won't all be Bitcoin. Bitcoin's just one of the expressions of this. The piece of advice is, what do you want out of it? What are you looking to do? How old are you? What is your risk tolerance? Are you looking to learn? Do you want to figure out how markets work and this looks interesting to you? Well, then decide, okay, in that case, don't go all in. Just put a bit of money in and get a feel for it. Get an understanding of what these different things are, what project really works for you, and enjoy the process of learning, losing money, making money, being the dumbass, and then thinking you're a hero and then realizing you're not. All the things that every person who ever invests has to go through. Do it and enjoy it. I try and think of the world in different people's eyes. And let's say you're the typical millennial kid who's now 32 years old, I think the average age. So you're just starting to come into peak earnings. You've got no savings. You've still got your student debt you're trying to get rid of. And then you look at real estate. So look at traditional investments. So what are investments? Investments are basically future consumption. You buy something now, you hope to sell it at a higher price to give you consumption in the future, right? When you retire or whenever it is, right? That's what an asset is to us in the investment world. If on the other hand, you're saying, okay, what I want to do is I want to get exposure to this space because I want a long-term investment. I want to build a significant thing like I would have done to my 401k or in addition to my 401k, then that's a different conversation. Then what you would do is start looking for portfolio allocation, which is, okay, safety first. You want the highest quality product with most of your money in it. So that would be Bitcoin. And then you probably want Ethereum, a decent size because the network effect and its use cases are so enormous. And then after that, you start thinking like I'm thinking. It's like, what do I know about the next part of this? Do I have any informational edge? Do I just buy the Bitwise 10 and just do that? Is that a smarter way of getting that investment? Probably. And then maybe in a couple of years' time, when you're starting to understand areas that really excite you, it might have been DeFi, it might be social tokens, it might be anything, it might be NFTs, that you can start then allocating a bit more of your own money into those bets. There's a couple of things that I think are important to me. One is an open mind. The issue with this space is if you decide that some network is your thing and you invest your $1,000 that you think is going to go to $1 million, you're now going to go on Twitter and every place fighting for your network. And that's good and also bad. You can fight for your network and be inclusive. And the other thing I'm really passionate about in getting people to understand how to take risk. Because buying a small, unknown, newly issued token is not the same as buying Bitcoin. And the Bitcoin people will say, they're all scams. No, they're not. So you need to allocate according to the risk you're taking. Humanity's not dealt with anything like this before, and it's not going to be easy. You see it all over social media. There's a fear of the future from some because their value system's changing. It was gold and value investing, it was bonds, and it was, that's what I know and that's what I'm comfortable with. Somebody's telling me this internet money is the future of everything. I don't want to know, and then it becomes anger and resentment, and I don't think that's going to go away for a while. I think people are going to be it's going to be very unsettling, this whole period. This whole thing, the more time I spend on it, the whole crypto space, the same is happening with technology at the same time, which is what the exponential age thesis is built on. Is like, we're about to go through the fastest period, technological growth and adoption in all recorded human history in the next 5 to 10 years. And nobody is prepared for it. How's crypto doing? Crypto's growing at 113% a year. It's the same number of users as the internet had in 97, just before you've decided to leave the world of finance and jump headfirst into it. People told you, oh my God, the dot-com crash, it was a disaster. Well, it wasn't, because out of that came Facebook, Amazon, Google, you name it. It was the start. It wasn't the end. Now, if you look at the size of those markets, equities, bonds, and real estate on a global basis, like global real estate's about $100 trillion. Global equities, global bonds, they're all like the $200 trillion market. And then you got crypto. the fastest adoption technology in all recorded history, which is the Internet of Money, where all of these things are going to be tokenized and will be part of this. It won't all be Bitcoin. Bitcoin's just one of the expressions of this. So that space is currently about $1.5 trillion today. So for it to meet somewhere around the equity bond market size, that's 100x from here. If it actually absorbs all of those markets, well, that's a 500x. So 100x, you, me, nobody in history, anybody has ever been given a whole asset class, an entire asset class that can go up 100x to $200 trillion. It fractionalizes. So it doesn't matter whether you earn £20,000 a year or you earn £200,000 a year, you can both put 10% of your income in it because it's fractional. Okay, how is this network growing? What is going to derail that? Is bad news about Tether going to derail that? Highly unlikely. Is regulation going to slow it down? Well, I think regulation speeds up adoption because then NatWest won't be saying, oh, don't use Binance. They're like, okay, fine, you do what you want, here's the rules. So it's very difficult to find a world where adoption goes down. So it is engaging young people because also all of those millennials grew up in 9/11, 2008, and now the pandemic. They have no trust in institutions. They trust institutions implicitly in some ways, but finance is the big one that they don't because their parents lost their houses and jobs. And so when you're seeing an opportunity that is social media in nature, that's native to the internet, that they understand and live in, that offers them huge potential reward and they can stick it to the man, well, kind of gets interesting. This is like a hypercharged new version of the internet. But if you think about as investors, the internet was something that you had to make the right bet. Was it going to be Oracle? Was it going to be Juniper? Who was the right player? How did you make the money? It wasn't as easy. This is actually pretty easy in many respects because you've got Bitcoin, which is a monetary network. You've got Ethereum, which is basically a platform for all of this. And then you've got a bunch of other things that you can invest in. As soon as they understand that Bitcoin is a very, very long duration asset, it perfectly suits protecting the wealth of nations. That's all the sovereign wealth funds are, right? Usually it's an oil or commodity producing country that gets windfalls in boom times and has hard times, and they offset it by drawing down on this pool, right? It's a savings pool. Now, that savings pool needs to grow over time. A lot of it's denominated in US dollars because everything's in dollars. So they try and diversify, but to have assets that offset global inflation or global debasement of currency, etc., it's a perfect asset, particularly because it's so skewed to the upside that they can have a 3% allocation, they can lose half of it, and it makes no difference. If you get it right, it really does make a difference to the portfolio. So I think it's very well suited. So we're at about 140 million users as of today of crypto worldwide. If you lower the rate of growth to 83%, to be slightly conservative, you're at 1 billion people by 2024. That's 3 years. It's like, okay, I can't get my head around this, but that's how fast it's growing. Now, you may be the really, really smart person who really knows their space and really knows the network effects and the possibilities, and you'll take a larger bet. And that's okay. But, it's teaching people how to use risk management because so many people are into this space and new to investing. And that's cool. But just to understand some basics about where to be happy to lose money and where to be happy not to lose money. And I'm not even talking about trading. I'm just like, you won't lose as much money in Bitcoin as you will lose if you get it wrong in a small token. So you don't put the same amount of money in each. And I think that lesson for people is a huge lesson to learn.